This video chart presentation of MELA Sciences Inc. It's a NASDAQ listed stock trading our ticker MELA. Clearly a big decline over the last 9 months for MELA. From up over top of $2, slid all the way down to 70 cents in June. Nice bounce, so about 50%. Moved up, challenged this 50-day moving average, this blue line. A key component for any charts trying to move above that moving average. But nice volume increase on Thursday. 1.3 million shares traded. Stock closed well off its highs. But that increase in volume and once again challenging this 50-day is something I think worth keeping an eye on going forward. See if it can break back through and try and challenge a pretty tough resistance spot right up around $1.07. You see this is a nice look to the MACD. It's what's called a positive divergence. Price per share is trending down. MACD is trending up. I think it's notable. You can see that zero line, so people often refer to as the money line, because if the MACD can break through zero, it's a very bullish indication of trend. And you can see it's had a very difficult time each time it's come up. It's bumped its head on that zero line and fallen right back down. Looks like it's dropping a bullish cross right now. So I want to pay attention to it, see if that bullish cross can follow through and finally get this MACD above zero. Similarly, you want to see the PPO above zero. It's much more bullish. You can see it's right up near that area again. ADX down low, only registering a 14. That tells me there's not much strength in the direction of the chart right now. When I see low readings like that, I look for the ADX to start to rise, to add some strength to one direction or the other. It doesn't tell you which direction, and the ADX itself actually doesn't tell you whether it's bullish or not. So you try to make a reading from these DIs. And with that positive DI moving upward, that would signal that perhaps the pressure that's going to come in is going to be to the upside. Money flow index has made a nice move. All three components back above 50. Tells me people are paying higher prices for the stock. This is a pretty ugly look to the accumulation distribution. A lot of selling's gone on. You can see the downward path it's been on. Not even looking like it's going to try and hold a base at this point. So definitely not getting anything from the accumulation distribution. I want to see this thing at least start to flatline. Show it selling pressure is subsiding. And obviously, it's a much stronger sign if you see it climbing upward, show that buying pressure is taking control. The Chaikin money flow is built upon the accumulation distribution, so getting a pretty similar reading right there, trending essentially in the red for 9 months, just reiterating the fact that selling pressure has been outweighing buying pressure. CCI is over the last month or so, at least making some higher lows, holding above negative 100. Bottom feeders will use that as a buy point. It would be a hold unless it broke back down through negative 100. But moving back near zero right now indicates the price is near its 20-day mean. And the full stow did have some momentum coming into it right through here. Steep climb. You can see all the momentum's got sucked right back out of it. Back down low. At this point, the bears are essentially in control of momentum. And the tricks, it's read similar to the MACD. It's a very slow-moving indicator, but making a climb. And like the MACD, ultimately, you want to see it above zero to show a bullish trend. RSI's turned with the buying pressure yesterday, right at that key point of trying to move through 50 to show that the bulls are getting a hold of momentum. So some fairly mixed signals with the indicators. I tend to lean towards this MACD because a positive divergence can be a pretty strong indication in charts. So I think it's important to see if this MACD is going to break back above zero. And what I'd be looking for from a support and resistance standpoint, I'd want to see that base hold at Thursday's lows of 88 cents. If it falls through that, it does pick up a little bit more here around 80 cents. But the potential of it coming back down and testing bottoms again is really increased. So I want to see that higher end hold. It's closed above that level every day for a month now. With stock price getting pinched on that 50-day moving average, I'm looking for this to try and make a stronger move and climb and hold above that 50-day. I don't want to see signs of downward pressure or the chart just loses its technical appeal. From a resistance standpoint, I'd come right there to near the July highs of $1.07. See all through that area up to $1.10. That was a pretty hefty area of support and resistance for several months through March, April, May. So I'd suspect that's going to be a pretty tough spot on the resistance side of things. If it can break above that, it doesn't get a whole lot easier. There's going to be some more right around $1.20, but I don't see it really stiffening up until around $1.40. And of course, that's getting near the 200-day moving average and a very big component to see an overall reversal in this chart. But it does look like it's trying to fight its way off the bottom. At this point, holding a higher low. And again, it's an important thing to see the price per share move and hold above this 50-day. So with those things in mind, I think this MELA chart is one worth keeping an eye on going forward to see how it performs. But as always, it's merely my interpretation of the MELA chart. Thank you for watching. Trade smart.